Hey, greetings. Dr. Jeffrey Scott here. This is my Market MRI Pro update for May 7th, 2025. Markets rallied as Fed holds. Perhaps the rally was related to rumors of tariff relief for semiconductors. Again, it's May 7th, 2025. Market MRI Pro at gmail.com, hgsidoc@gmail.com. Hit subscribe, hit your alarm. You'll get notified when I put these up there. Better yet, join my Google group, which I'll mention in a few minutes. And let's take a look at what we saw on Wednesday. This is for educational purposes only. Anything I talk about is in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis, how I apply them. Trading involves risk. You'll are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisors before making trades. I have tools in multiple platforms, but I'm an independent trader. Orange County meeting is coming up in less than a month. Residence Inn and Suites, Tustin, Orange County. I guess I should change the slide because it's too late to get the cheap rate, but it's only $400 for 3 days of education. Greg Mills at GAM72054@AOL.com. Outside speakers include John Person, Dan Fitzpatrick, Chris White, and I'll be there. Dev Kishal will be there. We're going to have a great time. It's always a great event. It's purposely held low in honor of the memory of George Lee, who many of us got to appreciate over the years. I mentioned my Google groups. It's called Top Down Trader. It's free, no obligation. You'll get earlier access to my videos, access to me, discounts on my products, and a dialogue with other like-minded traders. So we got through the Fed meeting all right. Thursday morning, 8:30, jobless claims, and that could be a big mover. Productivity will be interesting as well. We're at a point now, I think, a higher number is probably going to be welcome because it shows the economy is not falling off a cliff. But if we have a big miss and you put that with the GDP and the falling CPI, I think stagflation and growth concerns are going to be a problem. You can see Thursday night, we have a lot of earnings that still matter. Trade Desk, Coinbase, Cloudflare, Mercado Libre, Affirm. And then Friday, we still have earnings to go. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Now let's take a look at the markets. So the tool I use is called Market MRI Pro. It was built by my partner, Praveen, under my guidance, and it is a full-fledged analysis platform. If we look at one-day performance, the Bitcoin led up 1.32%. Dollar was strong, 0.73. But you'll notice the indices ranging from the Diamond 0.5 to the Russell 0.33 all finished higher. And this was a very volatile day, and you can see over here they finished in the upper parts of their trading range. VIX fell 2.66. This market was all over the place today. Even on the initial Fed news of a hold, the market spiked, then it came back down, then it went up, and it continued higher into the close. You could see on one-day performance, of the S&P sectors, you could see technology, discretionary led. Healthcare, interestingly, was up there as well. Materials was the big laggard. And if you look at what themes were working, semis, internet, uranium, solar, leisure and entertainment, software, clean tech, retail, MLPs. If we look over here, you can see we flipped back to positive on the new high, new lows at the 4 time frames on the NYSE, still negative on the NASDAQ. Here are 3 indexes, S&P 1500, NASDAQ, and NYSE. The top blue or green represents the percentage of sectors, up 91%, 73, and 91. Industry groups up 63, 60, and 68. And the ever important how many stocks were up, 62%, 50-50 on the NASDAQ, 57 on the NYSE. So although it was a strong finish and it felt good, and the futures are up, it was just a little bit over a 50-50 day in the markets. If we look at our timing model, really the key thing here, we remain in what I would consider a retracement in a downtrend. We are still below the WMA, and on the weekly, the spiders, the Qs, the diamonds, and the Russell remain in a sell. But we have to balance that with a pretty long-standing now daily signal. Let's let this reset. I'm on slow internet in a hotel. And we are in buy signals on the same ETFs on the daily. So until we break out above the 200 at the minimum, I still consider this a retracement and a downtrend, and those are likely to fail. So that's something I've kept in mind. But this has been a pretty big run off the bottom and a retest. So it's been hard not to play the long side, but I think caution still has to be warranted. If we look at the U.S. index ETFs, for example, you're going to see a similar pattern where we're running up and we're stalling in between the 50 and the 200. Here was your death cross. We've got to get above that 200, or we're probably going to come back down and at least retest that low. So you can see on the day, spiders were up 0.42. Qs look very similar, up 0.4. The diamonds, only thing different is they're still below the 50. Have failed there several times, up 0.5%. And the Russell sitting on the 50, up 0.33. On the day, the VIX was down almost 5%, and the dollar had a nice move, moving up 0.73%. I think as long as we fail to break above the 200, then I still can't believe we're in a new uptrend. Could happen tomorrow, but I want to see that happen before I get excited and commit the remainder of my cash or consider margin. On the commodity side, you could see gold was down 1.5%, silver was down 2.42%, oil after a little rally was down 1.69%, and natural gas is bouncing around the 200, was up 4.6%. And then with the Fed inactivity, 10-year down 0.77, as was the 30. So not too surprising considering the Fed comments, but I really think maybe it was those semis that drove the markets. If we look at the buckets, we're probably still a little bit bullish, but no excessive stocks below or above. And just looking at this pattern, probably move to the right on the NYSE and the S&P 1500, and I guess the Russell 2000. The NASDAQ as well. So interesting markets, still retracement and a downtrend. Market breadth, you can see the NYSE is struggling at the 200, and the NASDAQ's got a little bit ways to go to get there. Down here, we can look at certain things. Volume on the day. Now, I've been calling this giant breadth move of stocks above the 20 days. It's come back. If we look here, we got new high, new lows. We're positive on both today, as were AD lines and up-down volume. No new signals down here. So my market stance remains unchanged. I'm still cautious. I have deployed much of my cash. I am not in margin. And I still expect a market to run into resistance, at least pull back some. I've got tight stops, and I'm very careful with what I'm doing right now. This is not, to me, the same as it was down here when the most likely outcome was to go higher. If we look at the ratio charts to get a sense of what's working, and you can see technology here has really come off the bottom, and that the defensive plays, staples, utilities, real estate, and healthcare have weakened. Financials look okay, and industrials looked okay. If I go into the JAS layout and I run into the top-down list, we can see broad-based positivity led by healthcare, tech, and discretionary. So if we click those three sectors, we have 1,564 stocks. These are the industry groups in those, and if we rank them by one-day return, do that right here. There we go. We can click 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. So taking the top 10 groups from the top three sectors, let's thin out the herd a little bit by making price over 5, volume over 500,000, and we're left with 267. Let's rank them by short-term momentum, and let's just take a look. So MELI. It's a great South American play. I think earnings are imminent. Earnings came out on, I guess they came out on Wednesday with a significant growth rate and surprise to the upside. This one looks like it's getting ready to potentially break out. It is a very expensive stock and one that can be volatile with the markets. Faro had a huge move. Almost looks like it's been taken over. Let's see what the news was. Shareholder investigates Faro on behalf of shareholders. Merger. So, yeah. So it's a arbitrage play. PRCH, Porch Group. Beautiful move. Is this on earnings? Earnings came out on the 5th. Look at the surprise on earnings and revenue. And that does look like much 2 cents versus a 21-cent loss. Don't know what they do, but I get a little nervous chasing after a stock that has a move like this. Anything on the news? Earnings call transcript. What a move. Weekly, is this an IPO? So it's a stock that's come down from higher levels. Technology story. I might do a little research on this one. Why would I do that? Because I see something that's just had a major move, gap, volume, breakout momentum. Look at the volume, relative strength and OBV. My concern is right here, it's a little bit extended. I might expect it to drift down before it goes higher. CDW, I used to buy a lot of computer stuff from them. Why buy something below the 200 when we got better things? Live Nation, similar, or Livanova, similar story. Looks great, but it's right underneath the 200. Intuit. I don't think I've ever owned this stock. Relative strength and OBV look good. Breakout and momentum. Pull back to the 200 and a breakout. Looks pretty good. It's just not something I typically own. Oscar's up on earnings. This is one that I played in the past. 52% on the high jump, so it's good. Look at the volume, relative strength and OBV. This is one that I might be interested in entering. Duolingo, this has been a growth stock, cancel investors' dream stock, breaking out to $500 stock, hard to chase. ServiceNow, one of the, I think, leaders and winners in the AI revolution. Did it just have earnings? I saw their CEO talking. No, earnings are out. I always thought this was an expensive stock, but it just seems to go higher despite the fact that I thought it was an expensive stock. NTCL, Net Class Technology. I'd have to figure out more about this type of a pattern. Coping, pullback, big breakout here, extended, interesting move. HubSpot, down in its pattern. See anything here I like. So I typically will do this to get a sense if anything looks great up at the top. But then I have the I can't help myself, and that's the bottoms up approach where I'll pull the impulse up here. And I will leave my filter on. And let's just look at a couple of my signals I like. Let's look at the 2-day momentum up. None. Okay. All right. Let's look at the CPR buy. You can see none because I got to take something out. So let me just start that over. So let's look at with no filters, 2-day up. We had a bunch, but look at the price. They're all less than $5. Places that I don't typically go fishing. So let's go back here, put on the price and volume. Price and volume, and let's look at a multi-time frame CPR buy. Have 148 stocks here. Let's rank them by 2-day momentum. Halo. This is one of my favorite biotech companies, breaking out on earnings. They are less about creating their own drugs. They take existing drugs extend patent life, make them better and more convenient. Look at the surprise on earnings, which came out today. This is a big move on Halozyme. Immediately, we've looked at CDW Core. I've talked about drug distributors as being some of the best stocks in a tough market. This is Cencora, the old AmerisourceBergen. What's not to love? Yes, it's extended. But this thing just keeps going up like its brother McKesson, which we'll look at in a moment. Pays a little bit of a dividend, not much. If we look at Tempus, this one is volatile, although you get the sense that maybe it's an uptrend and higher lows and higher highs. We'll see we got a higher high here. Had earnings. I didn't even look at the earnings, but I bet they were good. Yeah, still losing money, but a surprise to the upside on both earnings and revenue. McKesson is the other one of the drug distributors that I like a lot. And, when we talk tight and loose, it might be loose over here, but boy, is this a tight stock. So maybe we should be looking at drug distributors. One other thing that I like to do is I like to leave my price and volume on, but let's build it from the beginning. Let's look for a pullback and an uptrend. Let's look for price and volume that we like. And let's hit OK. And you could see 116. Let's rank them by dots. And let's just look at the couple of 5 dots. PRGO. Perrigo, I think of things in my medicine cabinet, kind of wild and crazy. Oscar, I already showed you I liked. Lebanova, I liked, but I wish it was above the 200. Halo, I like a lot. Boy, a lot of the same stocks here. I'm just looking for something that's new. Lifetime Holdings, we saw this one over the weekend. These are different ways that I look at the market. I think that healthcare is going to rally here. I think that healthcare is resilient in a tough economy. And my favorite two in healthcare are probably McKesson and Cencora. Have a great day in the markets. We'll see you tomorrow.